We're snorting cap rates and shooting up cash flow here at Deal Junkies.
Welcome back, Deal Junkies.
Gabe cut us off mid-story last time.
To his defense, he was 10 minutes over for a very highly important phone call. So thanks. Shout out to
He should have
Gabe.
just taken the phone call
live.
on the podcast. Yeah,
Maybe
we could have learned something.
The negotiation may not have been best played over the non-live waves of the podcast air.
That's all
We
right.
could have aired it in like 6 months.
We'll intro our guest again, Mike.
Yeah, they don't understand that. They just produce. You know how many deals I've talked about way early ahead, and then they come out and like, fuck, did that really just go out?
Like your office building.
Yeah, that was one of them. Lots of them. But I think that's the value for the crowd.
Yeah,
right?
talk
They get
about
to hear-
deals,
Yeah,
yeah.
exactly. The emotional roller coaster.
I don't think I ever got the end of the office building story, but that
Oh, we asked for a 30-day. We were happy with the plan. We had half the capital raised, and we had a really good line on how we're going to do the rest. We wanted to make more time. We didn't want our $200,000 earnest money to go hard, and the bank did not extend. And then they sold it to the neighbor for $3 million instead of the $5 million we had.
and Ashley got it for $3
million. Yeah.
How did you look at the Big Pink?
I think Menashe bought that new, fully renovated building for less than what they'll be able to donate the other portion of the block for.
Did you look at the Big Pink? Did you want to buy that?
I didn't. No, I'm just done on that stuff right now. I'm so focused on the things that I do have traction on that it would be a distraction. But the Big Pink was a great freaking story, dude. Brand new, or a local developer, $46 million acquisition, 88% less than what it sold for. The 375 10-ish years ago after it was remodeled 10
Crazy.
years ago.
But how many floors did U.S. Bank have that they're?
They had,
Yeah,
like-
that's the problem. Is U.S. Bank
They
did
had
not.
like 40% of it or something.
Yeah.
Yeah. So, but their occupancy.
But that's still probably cash
Yeah. So their
flows
in
with
place
what they bought
rents,
it
because
for.
it's still at 30 or 40% occupancy. So it's in place rents create cash flow, and then he just has the buyer's going to supposedly put another $100 million into it. But it was fully renovated 10 years ago,
Yeah.
so it's dated. We're talking
But in good shape.
TIs,
Yeah.
exactly.
Yeah.
So essentially, you have a huge TI budget to then go lease the building. And you're going to give away TIs to attract the tenants. And so right now it's just a tenant. It's like an arms race to get the few tenants that are signing contracts. And then how do you...
It's just a tough area too. It's not in a great spot.
but it has the parking lot. The parking lot helps a ton. I bet you it's probably the parking lot income is worth what they paid for it.
Yeah. But anyway, we're back in the studio with Caleb.
Yeah.
Who just
This is what actually
he
what
only
Caleb-
makes $200,000 per deal
Yeah.
that he does.
Fuck Caleb. This is actually what Caleb loves to talk about. We get into some of the best economic
really?
discussions.
Yeah,
we in fact, I'd say that because Caleb doesn't he's not a high volume deal guy, so he doesn't come to our calls a lot to talk about deals and what he's working on. He calls to check in on saying, and then have more macroeconomic planning.
What do you guys disagree
discussions
about
of-
the most?
I wouldn't even say we disagree. I think what Caleb does a great job doing is listening to what I say, and he thinks like I do from an economic machine standpoint, and then he pushes back on what he isn't necessarily have clarity on or what he doesn't agree on. So it's more of we expand our conversations. I expand my perspective, he expands his perspective. So it's not an argument of who's trying to win. It's a discussion about how we see
I was
things.
hoping to have an argument
and,
right now.
And the way that I kind of think is I play devil's advocate
Yeah.
to kind of figure out
How he's thinking.
how I'm thinking.
Yeah.
So yeah, we talk about that, about demographics, and just how that plays
Yeah.
into investment strategies.
So you still broker for other people?
yeah.
Why?
How much did you make on your last commission?
Can I share that?
Yeah, absolutely.
$50,000, right?
Yeah, it was $2 million
Yeah.
house in Portland.
Yes, you
and
made like 50, and then Mike took half of it. Screw that guy.
I pay him a flat
Yeah.
fee.
Dude, no.
But
Mike will take the same.
so
I was like, wow, I get $250 of this $50,000 wire that just hit the bank.
But like,
Awesome.
I'm still thinking like, even that, like, is that the biggest house deal you've done?
Yeah.
So like, you made $50,000, and you're telling us about these lot flips, and you make 200. So it's like, why even broker the house?
It was a referral, and I probably spent 15 hours.
But you could have found the next in that
Yeah,
15
no,
hours
not in-
$200,000 deal.
no,
No, 15. You can't find a deal like that for. I'm looking every
looking.
day. Yeah.
If you were a higher volume guy, his average profit would be
go
cut
down.
in half.
Yeah. I think so. I didn't really share about this. I've definitely optimized for time. I have a 1-year-old. My wife was working up until recently. I pretty much have 2 days a week where I'm actually full-time.
Yeah,
real
so you like
estate.
the lifestyle.
So I've been home 2 to 3 days a week where I'm working during nap times, but for the most part, I feel like I work about 20 hours a week.
How do you structure your day? Because like we don't have an office. You don't come to the office. What do
Yeah,
you-
so I mean, the days where I'm home with my 1-year-old, I'm working probably 9 to 11, and then maybe if it's not too hot and I go on a walk, I take a couple calls in the afternoon. So I might work 2 to 3 hours on Tuesdays and Wednesdays, maybe Fridays. Monday, Thursday, it's project visits. It's looking at new houses that hit the market. I call brokers when I can. It's usually when I'm driving. So, yeah, I mean, I would say 20 hours a week.
Do you feel like you have good discipline and efficiency in how you run your day?
You got to if you're only doing 20
I have
hours.
definitely
You have
good
to, yeah.
efficiency, and I have a great construction team. I think because I finished up a couple projects. I still have 5 units that I'm finishing up this month, but we've got a system where they give me weekly check-ins, what happened, what's happening the next week, projected finish dates, spreadsheets, for finish selections. Like we've got great systems. So, and we schedule our project visits so we're not wasting time.
Yeah.
But yeah, I mean, I'm sure there's always room for efficiencies. I still really haven't incorporated AI into any automations. We use it for kind of consulting purposes, but not automation purposes. And I've never played around with any agency or like agent AI, which I think that's like the next level when you have artificial intelligence doing tasks where they're researching code changes in Bend or things like that, where they're not just, you don't have to feed them information, they're going out and finding it.
So how are you finding your deals you're doing? On market, off market?
I have pretty good filters with the RMLS, so I think that probably captures 70% of deals. And then I'm also every day and it can happen in 10 minutes. I'm just sifting through stuff that just hit the market.
And you're sending your own offers on all those?
Mm-hmm.
So how many deals are you doing? How many offers do you have to write? Deals you have to look at to kind of find one that fits your buy box?
This is where Sang, I think, is a lot better at this than I am. I don't write offers unless I'm excited about the deal at what I think I can get it. Sang just writes offers. I think he doesn't expect to get most of them, but he gets a fair amount, where I kind of feel out the motivation before I write the offer. So I think I probably write 10 offers for every deal that I get. So, and I probably do, 5 deals a year. So I'm not writing a ton of offers.
Yeah.
So if you're writing 50 offers a year, that's not a lot.
That's one a week.
One a week.
Yeah. No, it really is not a lot.
And if you're using filters to then identify
but you're smart enough now where you're sifting through so many deals though to get to that, to write
and Sang doesn't write offers. He
sends
gives verbals.
emails,
He does emails. So he's not actually writing the offers. I could do that. He doesn't create I don't think he actually calls them beforehand. I think he just gets their email from the RMLS and sends them over kind of a written LOI of sorts.
It's a more spaghetti on the wall type of approach.
Yeah.
But he still filters. It's not just spaghetti. It's very stickable wall with stickable spaghetti.
I might have to join Rarebird. I got in trouble. Hopefully Gabe listens to this. I got in trouble with his Resi team.
Yeah.
I don't even write offers, but they said I was just writing too many shit offers and giving them a bad rep. And I was like, dude, we close like this crazy high percentage of
So
this
why do you
stuff.
think I want you at Rarebird Real Estate? I want you to
'Cause we're
come ruin
friends.
my
We're
reputation.
friends.
Hey, Mike, let me come ruin your reputation.
No, dude. You can have half the splits. I'll pay you more.
Yeah, I think the thing with Resi is the majority of sellers aren't super motivated, especially right now. They've got decent debt. It's the classics. Death, divorce, and what's the other D?
Death, divorce,
Taxes.
I don't know.
Yeah,
I know what you're talking about,
delinquency
though.
or something.
Yeah.
Maybe. Yeah. So most deals I see aren't deals. You know, what would work really well is just they're not going to come down to a price that makes sense. And the development metrics have changed so much in the last year and a half that, that's why I haven't bought any development
And
deals.
even 5 deals a year over the past couple of years is high volume for the development world.
Yeah,
And it's
I
just
will
you
say,
doing the deals too,
it's
right?
just,
Yeah.
for the most part. And I used to do a handful of like 2-unit developments. You build 2 ADUs basically. I'm not doing those anymore. It's the same amount of work to build 2 units as it is to do how many are you doing on Franklin? Like 7? 6. Yeah. It's the same amount of work.
Yeah.
So,
We just got our cost estimates, and I haven't looked at them yet, but I'm really excited to.
Yeah. So, I mean, your infrastructure costs on deals like that are going to be the same. You know, public works.
Yes, you have
all
economies
that.
of scale.
Yeah,
Huge
the problem
economies of
is
scale.
it puts a lot more intensity on the existing residents.
Yeah.
And right now we're not in a market where you can add more intensity to the existing residents. And so we're also kind of relooking at our strategy in that aspect, where I might even give Franklin to our midterm management team to see, hey, what can we midterm rent this for? And then how does that look in our capital stack as we roll into the back end? Because we got it really approved fast. House is done fast. We're already in permitting. We have our budgets. I'm talking, I'm about ready to now put those together for a packet for our lenders and kind of look at what our options are. If we don't remove the current debt stack, how do we just incorporate that into a new construction loan? So strategies change, man.
Yeah. That's the thing with development is it's a 2-year cycle typically. So the market can shift a lot in that span. So when we were, when the infill project first came down the pipeline, we were underwriting and everything looked like it would be a great deal. And then I think just with where rates have stayed, and Mike and I have talked a ton about this, I think the first-time homebuyer segment has gotten hit the hardest. Like anything under 500 and really anything above 350 to 500, because it's not 350 to 500 is still a $3,000 mortgage payment.
Yeah.
That's not cheap.
And their rent
Is
22
for a 2-bed. So they're jumping. Every first-time home buyer is coming from a rental. So they're comparing their payment and their only payment. They're not bringing in equity from other real estate. They didn't benefit from the huge appreciation during COVID. So they might have a 401k. They might have some savings. But for the most part, they're going to be pretty high leverage.
3 to 5% down.
So they're comparing their payment at 7% to what their rent is, and it just doesn't pencil. So prices have to come down. There's a ton of supply that's has to sell. All of the infill stuff's 2 bedrooms for the most part. So all of that stuff, unless it gets turned into rentals, which where rates are at, it's hard to. If you were planning to sell and you weren't planning to rent, most of that stuff doesn't pencil as a rental unless you're keeping a significant amount of equity in it. So
and we are
all
seeing
that stuff,
some 4 and 8 unit projects going to the rental market, but
yeah. So anyways, all that to say, there's a ton of supply. Demand is pretty minimal, so prices have come down a ton, probably 20%, I would say.
And I wouldn't say demand's minimal. Effective purchasing power is reduced the demand to be able to transact.
Yeah, I think when rates come down to somewhere a little closer to where rents are for something comparable, all of that first-time home buyer demographic, because Portland median age is 38.
And what it's
Median
doing
home
is it's creating pent-up demand.
Huge
is what
pent-up
it is.
demand. So when that shifts and rates come down to the point where a mortgage payment's pretty similar to rent, I think that 20% drop that we saw in that segment of 2-bedroom condos, 2-bedroom townhomes, I think we're going to fill that gap really
Absolutely,
quick.
very quickly. And that's why I love the build for rent model, because you can ride the rental side while it's working in that arena, and then once it shifts from renters moving to buyers and you have different separated title on all these units, you can sell them to your tenants. Or if a tenant moves out, now you got a vacant unit, you can choose to sell it or rent it.
Yeah.
And the other thing is as that exodus happens, maybe your vacancy rate goes up, but I don't really think you're going to have a hit to your gross income as much. And so it's just good management can keep your net operating income in the same, whether you have an exodus into the for sale market or not.
So let's talk about your worst deal you've ever done.
We did. We got into
Was that your worst deal, or have you lost more?
I think that was my
deal?
most stressful deal, just because I didn't have resources that I could lean on to get me out of it. So it just felt like I had to figure out how to get out of it, and I didn't. I was learning as I went, so I didn't know how to solve those problems. And I met Mike kind of towards the end, which definitely helped a ton. But a lot of those problems, it's like you just got to kind of put one foot in front of the other every day.
Have you lost more than that on a deal before?
Yeah. So recently on 2-unit ADU development, I lost $60,000, I think.
Oh, let's talk about this one then.
Yeah.
How would you buy it?
So
for?
this was
What'd you do it?
This guy, dude.
He's just a masochist for other people.
He is, dude.
I don't think Trevor's ever shared his biggest losses.
He
Maybe
has. He has 800
Okay.
grand. There's an episode. Trevor's
Oh,
$800,000
man.
loss.
You got me beat then.
Yeah.
So yeah, this one.
Well, he conflates the shit out of that. Well,
It's for the title, dude.
great YouTube thumbnail.
he'd make a really good politician one day in his framing. Sorry, go ahead.
So this was a couple months after you were allowed to build 2 ADUs, and we were looking at pro formas based on historic sales,
Like condo it out and sale.
Yep.
Okay.
And I was using comps that I thought were solid. There weren't a lot of them, so it's you're
So new, yeah.
you may have 3 good comps, and they might not have sold in the last 3 months, but they're almost identical product. It's just trying to figure out the neighborhood and how it sits on the lot to kind of figure out the value. So I discounted it from the comps a little bit. This was in the west side of Portland, which, if you know this infill stuff, 90% of the infill projects are on the east side. You've got
There's just more land available for
there's
it.
less land, but there's established infrastructure. You have curbs and sidewalks. You've got it's more walkable too. I think these units lend itself to more walkable neighborhoods.
The west side buyer versus the east side buyer has a different demographic as well because of those two things. So if you want to live in that urban atmosphere, you really don't have any options on the west side other than the Pearl District, where it's really expensive, like Northwest 23rd. You go to the east side and you can get all those amenities. But Southwest doesn't have much of that.
Yeah. So long story short, bought it kind of peak COVID euphoria, was competing against home buyers, which at the time I'm thinking I have an edge against a home buyer because I am going to make all this money developing. I can probably even pay a little bit more and still do totally fine. But what I was looking for is corner lots in a great neighborhood.
Why corner lot?
Because then the rear units have
Go to the
frontage.
east side.
It feels more like a
house,
standalone unit, not walking behind another house. So corner lots, great neighborhood, large lot, like ideally 7,500 square feet or up. So this was 9,000 square feet corner lot, awesome neighborhood. And I thought I was probably paying fairly close to market for the house. So I bought this house from a seller, an investor seller, who was selling 2 properties and 1031ing into something else. And they wanted to sell both of them at the same time. So I called the broker. I was like, hey, explain what I was going to do with it. She told me about this other property. And I was like, I actually am interested in both. Let's I'll write offers. Let's get it done. The other deal was a lot split. I think I made about 170 on that one in a couple months. That one was fun because
You made 170 in a couple months.
Well, I took a refundable, or maybe it was non-refundable, earnest money deposit of $100,000 from a builder before I closed.
Oh, nice.
And so I used that money as my down payment to buy that property.
Well,
So you used the builder's earnest money to make 170 grand.
Yeah,
that's awesome.
Yeah. So, so that was zero money down, and this other house had, I want to say, 8 or so offers that were pretty close to where I was at. I wasn't the highest offer. I think I was under the highest offer by about 15 from what I've ascertained.
But they had more confidence in you because you're.
But they wanted this transaction to close at the same time.
Yeah.
And I told them, even though I was pretty excited about the other one, I was like, I'm only going to do them if I can do both.
Yeah.
So they sold it to me for a little bit less, but I waived inspections. I got the deal done.
Yeah.
But in the back of my head, I'm like, well, I wasn't even the highest buyer for the house, and I'm going to put a little bit of work into the house. I'm going to fix up the kitchen, probably put 30 into it. So hopefully I can at least sell it for the same price. Like, I didn't have to do anything. The yard was just so large. Like, I kept the garage. They just lost about 4,000 feet of their
yard,
9,000 square foot yard. So they still have a 5,000 square foot lot. So that's
standard.
Yeah. So I'm like, I don't think that's going to detract from the finished value that much. Maybe I can sell, like, I bought the house for $615. Maybe I can sell the house for like $550 or something.
Yeah.
So built 2 ADUs, went with a builder that I hadn't worked with before, but they were the builder that built the comp that sold for the highest. So I'm thinking, like, I'll go with them. Yeah. They know what they're doing, obviously, because they're getting these, these ADUs, 800 square foot, 2-bed, 1.5 bath ADUs, and they're selling for over 500.
Dang.
Which is crazy. Yeah. Granted, it's not always apples to apples with these comps. So anyways, went with them. They're a little bit more expensive. They have a quality product. They do a great job. They run a tight ship, but they definitely are more expensive than what my other builder would have done it for. But you get the benefits of
time, quality,
streamlined permitting, and it required zero work for me because they had all their finish selections. It's the least amount of work I've ever done on a development. So there were certainly benefits. But anyways, paid kind of a premium on the construction side, because I thought I'd get the premium on the back end. And then with the house, put 30, 40 into it. And I did a flexible condo plat so I could sell the house earlier. But it was going into winter.
Do you go hard money into this also? Okay.
Yeah. So it was going into winter.
Who do you use for hard money? Do you use the same lender typically, or do you shop
There's
around?
A couple different. Yeah. I partnerships matter, but at the end of the day, somebody offers better terms, and it's a equal.
What kind of companies do you use, or like?
Are we allowed to say?
Yeah.
Mm-hmm. Yeah. Renovo is kind of my main.
Yeah, we use them a lot.
They're. I think I came for the terms, and the service is probably what's won me over.
They have the best draw program.
The draw program is amazing.
Yep.
Yeah. So, yeah. Anyways, Renovo, Rain City's great. I used to use Legacy Lending, but they're kind of winding down. They're not as competitive anymore. But
they cost more.
Yeah.
Yep.
So
cost more, but
they do it quick, dude.
They're quick.
Dane Fitch is awesome, dude. He was doing one for Paul, and he keeps closing these things in like a week or two.
Yeah,
just easy.
Yeah, no, like I don't use Legacy because of their lending. I use Legacy because Dane provides service that others can't. Yeah. And even when you compare him to like Renova, because he just has so much control.
Dane fixed our boat for us too, because dude, we couldn't fix it for the longest time. It was just sitting there. He's like, "Hey, can I take your guys' boat for a week? I'll rent it for you." Like, bro, you can just take it, but it's broken right now. So if you can figure out how to fix it, awesome.
My dog shit on his Airbnb carpet.
You take your security deposit.
He didn't even. He's like, dude, I just made a $20,000 commission off you. I'm not worried about it.
And that's not a small dog, so I mean,
no, it was diarrhea, dude. It was so bad. Oh God, so bad. Sorry, Dane. All
right, so you're doing these lot splits. You're down 60 on the house. Doesn't matter because you got the land now, and then you think you sell them. You said 500, 550 each.
So yeah, I sold the house for 500.
Okay, so you hit what you thought.
No, I thought I'd get 550.
Okay,
I thought I'd get 550 on the low.
So instead of making 300 grand, you only made 200. So you hate this deal or what?
Well, no, I lost money.
You lost 60, dude.
Yeah.
Because it costs too much to build.
It costs so I can build ADUs for. I built them for 170 on the low end, all in permits.
You said 3-bed, 1.5.
2-bed, 1.5.
800 square feet.
I've built like the cheapest I built, and this was a couple years ago, but I built for about 170.
Yeah. So you
this
thought
cost about 250.
Mm-hmm.
Okay, and you sell for 5. Where's the loss come in? I don't.
So I sold for 465.
Okay.
We had a decent. Our holding costs really ate into a lot of things. I took probably $150,000 loss on the house.
Okay,
after
so that
the remodel,
also,
and that's not including holding costs.
Yeah.
So
that just ate into all your profit. On the back end.
And I mean, we try to buy deals where we break even on the house. Like Mike does the same thing.
Yeah.
And a big part of that is that's a huge part of your margin. If you're getting the land for free, you can make a lot of mistakes in the build. But if $150,000 for a 4,000 square foot lot is pretty close to what a lot would
Market
sell
value.
for in that neighborhood. So I could have basically saved myself a lot of the time and effort of going through the condo plat and fixing up the house and all of that.
And that was a flip of market conditions. When did you buy it? Early 22?
May 2022. Rates started going up in like August.
Okay, so it just killed your buyer pool.
And it went from 4% to 8% or 7.5% in like 6 months. So yeah, it was brutal. We finished it up the following summer, or maybe it was like a year and a half later. And
when were you taking the house to the market?
I think we were able to do it in like 6 months. So yeah, it was that winter.
So yeah, that winter, which is right in the
Worst
switch
time.
of market conditions. And here's where, when market conditions flip like that, is you have a detriment to the buyer because you're building in the backyard, and that's the objection you always get, which is we're going to build next door. In a hot market,
Doesn't matter.
Yeah. That detriment will just be waived by the buyer. Once demand pulls off, and
they have
once
other options.
Exactly. And they're like, why would I put up with that? You have to bribe me to put up with that detriment. And so that right there, longer marketing time, you're going to the market in the winter, and then the buyer has leverage on you. And so if you look at your $60,000 loss, a lot of it came just from the house portion. And you probably had to spend more on your scope of work.
I could have minimized that by building for less, but I would say the house was the primary reason. And a huge reason we didn't sell, we sold the ADUs for $460, and I thought we could probably hit over $5.
Also rates
And what Mike was saying, the west side buyer is looking for a garage, they're looking for more space,
and that's where
families
building less doesn't always make sense, but in this context it absolutely could, because you're in a location and a demographic and a product that is not going to get the premium that the quality can bring. So sometimes you are in the right location paying for the extra quality, then brings in the buyer that rewards you on the back end. In the context of this project, would have done much better on one of your other ADUs.
And there's a development maybe a half mile away, right next to Gabriel Park in Southwest Portland. It's, I want to say 30 single family condos. So they're kind of the same structure as what we're doing, just bigger. They're like 1,500 to 1,600 square feet, 3-bed, 2.5.
Sorry,
bed.
what were your ADUs again?
2-bed, 1.5, 800 square feet.
Okay.
So these are about 1,600 square feet, 3 2s, and they were selling for $800 to $900.
Oh, damn.
Like a half mile away.
Wow.
So that's what the market wanted.
But they also had some pre-sales on some smaller stuff in the 500s. And it's like you're now competing with volume, right? So now you have a volume of production build that has to sell, your production build that has to sell. And so now you're competing for a demographic that doesn't have a lot of meat there.
But you made $170,000 on your
so
you still netted 110.
I still netted. It's just a lot of work to go through. Like if I had just done the lot split, because there were no buyers on the lot split that I know of, and not done the development, I would have kept another 100 in my pocket. So that's why I'm a lot slower to buy deals, because we're not out of this economic cycle yet. So we can't assume, I don't want to ever buy a deal assuming that market structures change. But you just got to prevent, you don't want to put in 2 years of work and a lot of time and a lot of money.
Opportunity cost.
It's huge opportunity costs. And so that's why, it's a huge reason why I think going with value add multifamily, it's just a quicker cycle and you're getting in place cash flow. It reduces your risk. And we're buying at a time where there's a ton of pessimism about Portland. There's a lot of pessimism about multifamily.
Yeah, you can see the 1% rule in place, like purchase right now.
So the way that we think about it is you're buying on a value add, thesis that you can increase the value through operational efficiencies or, construction, just general improvements. You're going to make your money that way. If any of those headwinds turn into tailwinds, you're going to do really well.
Yeah.
If the sentiment about Portland shifts nationally and we start getting outside capital pouring into Portland, you're going to do really well. You're going to have a great market to sell into if you wanted to sell. If the city kind of cleans up its act a little bit, if rent control changes for the better, I mean, it might not. It could change for the worse, but I mean, even or interest rates, like that's probably the biggest macro factor.
Oh, dude, you'll think this is cool, Mike. You might too. But we went and walked this 42 unit on Wednesday this week in Portland on MLK, and you go there, it's a 100-year-old bricker, and the first thing Mark comes with me, he's like, we have to like redevelop this 8-story building. And the dudes who own it now, they were the coolest dudes. They're in their 70s. One dude lived in Dubai 3/4 of the year. The other dude, his whole job is he sues the government. So during COVID, how we got that 80% back of rent that wasn't paid? It was him single-handedly got that in place, and then he was the one who bumped it to 100, like him personally. And these dudes were sick, but they bought this building for 3.2 in 2018. And like had it on the market for like 6.7, 6.3, and then 5.8. And then their broker calls everyone on their list and is like, they'll take 4 for it. And then we go walk. I'm like, oh, I think we can make this work at 4. So we go walk it. I'm like, holy shit, we got to buy this at 3 because you got to drop $1 million into the upgrades, and then you got to turn every unit because it was a piece of shit, dude. They were just like bare minimum to get it by, like type of thing, painting the cabinet shut, like because they were self-managers, so they're not
painting
like
the cabinet shut.
Dude, yeah, dude, we tried to open on their fresh turn, so we go into their fresh turn of their new unit, and the floors, the vinyl tile thing, just broken apart, holes in the ceiling, and we're like,
this is a fresh turn, huh?
Yeah.
It's the meme where they paint over the light switches.
Dude, it was that, yes. And they were like just doing it and getting $900 rents on this thing. That's a 500 square foot 1-bed on MLK in a sick location. And I'm like, I underwrote it to get to like $1,300 rents at market if you do an actual turn on it. And I was like, it was gonna cost, like, we're gonna buy it at 4 and be all in at 6.3, and it's gonna be worth 6.3, so it doesn't make sense. But as a redevelopment play and having them contribute their $2 million of equity going for it, I'm like, oh, we could potentially do that. But now we're at the point of they have to realize that it's not, no one will buy this. It's tested the market.
Yeah,
they're 70s and they don't want to own real estate anymore because they're done. And like, they have the plans and see the vision for the thing too, but they just don't want to own stuff anymore. But the only way we can do it, so we don't have to go rate, because it's too expensive still.
What would you redevelop it into?
Or retail on the bottom, like 75 multifamily units, and that's like a $15 million project. I don't remember.
Do they have an Irish? No, they're in Dubai. I was going to say, is it the Irish family?
No,
I wouldn't develop on MLK.
No, why not? Tell me. You guys know the area way better than me.
Well, it depends on where it's at on MLK. The further north you go, the worse it gets. There's some really nice spots in southeast, but just MLK in general is inner East Portland. It's just still overdeveloped. So if you look at the only parts of town that are actually being developed right now where there are cranes, it's where the institutional money has gone because they're weathering the storm, and it's not far from MLK.
Yeah.
So that's one of the few areas of town where you still have a large oversupply of apartments.
Okay.
So that's part of it, but
we haven't done the DD. It's just like, okay, we could see that potentially working, but this is going to cost like $400. Like, the numbers still very well may not work, but I don't want to go spend 40 hours trying to figure it out if they're not going to be on board.
Well, $3 million, I mean, what's 75 grand or 3 million divided by 75? What's your per unit cost per dirt?
It's still too much. That's why you have to do the equity contribution.
Yeah, and you might be the only bid on that. So in that, like, you're negotiating it against yourself. So
but it depends on how you do the contribution to the new structure, because essentially if you can wipe away $2 million,
it's just, can you create enough spread on the back end to where it's like, yes, you're overpaying, but you're leaving them in the deal, so now your raise is significantly smaller because you're taking their equity forward, and then can we multiply their capital to a way that makes sense for them still?
Correct.
And I don't know the answer, but like, back in the napkin, I'm like, okay, based on the PM conversation, $15 million build, it's about a $22 million project. Just literally back in, actually, like, possibly, maybe, like, but then we go look at our numbers, it could cost $22 million to build and be worth 15.
Yeah. I think the way that I'm looking at most deals right now is just primarily from a return on headache standpoint. And I think kind of hand in hand, it's just opportunity costs. 2-year projects with a lot of headache. He sounds like a dude that's had a lot of success and has some liquidity that's keeping his decision process slow.
You don't have to do deals. You're at the point where you're probably sitting on a good amount of cash, right? And
you got some rentals now too,
and you're cheap. So like, you live a comfortable life and you kind of have what you need. So
I mean, I enjoy what I'm doing, so I'm not just doing this because it's a means to a financial end. Like, I want to do deals that I like doing, not that I'm going to hate my life for taking them on.
Yeah.
And I'm okay hating my life for 6 months if it is going
Makes
to
you a
be
bunch of money.
financially worth it. But I've done enough deals that have been really challenging, and I haven't made enough that it has made sense to do that, in hindsight, that I just, that's the primary metric. And also I think when you partner, you spread out some of the stress, and you just have more, you have incentives from other counsel. Like I have Mike, to bounce things off of, but if he's not a partner in my deal, it just isn't going to get the same attention.
Absolutely.
And that's just, human nature. So having more partners that all have buy-in to spread out stress when things are challenging, if an apartment building does burn down, it's not just me trying to figure this out. It makes more sense. And I don't need to do deals, which I think typically I find the best deals when I don't want to do a deal.
Yeah.
My wife and I are talking about going to Europe for a month in September. Gonna pimp our aura out there. But I'm like, I don't necessarily want to do a deal right now because that will make
Vacation worse.
This is make it challenging. But also it forces efficiency. When you are traveling, you have to have systems in place to kind of catch the balls that are getting dropped while you're gone. So, and that's, having a kid definitely has forced a ton of efficiency. So I want to do deals that are worth the headache, because every deal is a little bit of headache. Nothing's smooth sailing. You're getting paid to solve problems. So it's like, is that a problem you enjoy solving? Are you good at solving it? Or are you going to be solving problems on how to solve the problem?
So what's your favorite deal you've done ever?
I love the easy ones that make a lot of money in like 3 months.
Tell us.
But I also like.
What's the most money you've made on one of these?
I think 250 is the most.
That's pretty cool.
Is that in North Vancouver?
Yeah. So
Fucking
in like 3 months.
I'm so mad at that.
Oh, let's talk about this deal. That's sick.
This is one where my broker brought it to me multiple times.
And you're like, this isn't a deal.
I just wasn't ready to lowball him.
Nobody expected this builder to pay what he paid.
It was stupid what you got on the land.
True, and shockingly quick.
Yeah.
I listed it on the market. It's like I have a couple
Daryl Boldle represented the builder. He's able to freaking get way too high of a price.
I typically work with the same builders. This builder likes to get a good deal, and I'm starting to realize, like, I think I've been leaving money on the table by working with it, but it's been easy, and he's done $100,000 deposit. It reduces risk. We have a great partnership.
Yeah.
But I'm like, I think I want to see what the market will pay.
Yeah.
I'm glad I did, because I was talking with this same builder. I was like, hey, what do you want to pay for this? And he's like, I think I'll pay $240, $250. I'm like, great, that works. Numbers work for me. I'm going to do the deal.
Why doesn't he do those deals? He just doesn't. He just builds. He wants build ready.
I think it's speed of,
that's his
capital,
specialty.
Stays in his lane.
Yeah. That's
builders need developers.
That's a good partnership. Yeah.
Yeah. So the house was in pretty good shape, structurally, just needed paint, carpet, light fixtures. That's about it. I think I put about $40,000 into the house. I bought it, so it was on the market at $700, then $650, then $600, then $590, and I wrote an offer at $525.
What were you seeing it at? Because you saw it before it hit the market.
Yeah, no, it was in the sixes, and at that time it was, I need to be around 500, and we weren't going to
just
write
forgot
it
about it. Yeah.
Yeah. So I wrote at $525. It was an estate sale, so there's a couple of heirs that I think I've learned having 2 to 3 heirs is ideal, because everything's getting divided by 2 or 3, and so when you're coming down a huge amount, that amount gets divided by 2 or 3
Seems
or
like
4,
less.
so it doesn't hurt as much.
They go from making $100,000 to 70,
and they've already spent that money in their mind. So the longer, they're ready to just get whatever it is, 200 instead of 220, And so offered 525, went back and forth, landed at like 540, and Mike probably wouldn't have done that deal, but I put about 40 into the house, so I'm in at 590 with 595.
Okay. What's the house worth at that point then?
Sold the house for $565.
Okay, so you get near free land, like your play.
Pretty close, yeah. And I listed the lot pretty much right away. So I hadn't started the lot split process, but it was a lot confirmation. So it was almost no work.
What's the difference?
Lot confirmation is where there's a historic lot line.
Oh,
it was platted for 2, and then
they
got
didn't
combined
finish it or whatever.
Finish it.
Yeah.
So, and this one I didn't even have to move a lot line. It was already where it needed to be.
And that was less than 3 months to.
Yeah.
Wow.
The streamlined ones can go.
Yeah,
That's
it
cool.
was fast.
They'll say 6 to 8 weeks on the most streamlined they can
Oh,
get.
wow.
Yeah.
So
Okay.
so I listed the lot maybe a couple days after closing at 300. That day I got an offer. I didn't even get a call. I just got an offer at full price.
Yeah.
And I was like, should I listed it higher?
And when I was running numbers, maybe 200 is what I valued the lot at.
Yeah.
And then the other part is this is where the bandwidth decision process, the time process, the opportunity cost process that Caleb has. We were so over leveraged into our build for rent or build for
you
sale
didn't need
model.
more deals.
Yeah, and we didn't even want to take on the risk of a build to sell. And so I analyze it as a build to rent, which is what can we get on debt on the house.
Yeah, and you're like, we're just going to be sitting on money. It's not going to make sense.
Yeah, and so it's a whole nother underwriting process because I'm underwriting it of how it fits into what we're doing globally.
Yeah.
Whereas because Caleb wasn't overextended globally, he can underwrite it through just the context of that one deal.
Yeah.
Yeah.
Yeah, so I mean, I was in and out in 3 months, so loved that one.
And the other thing is I'm like 6 to 9 months. I'm not running it on 3 months.
yeah, I didn't.
Yeah.
I think I assumed 6 months, but yeah, it was maybe 4 months with the house. The lot split was 3 months.
So that dude just bought it, closed, no problem,
And I think we also thought that we had to do a property line to get the value out of the lot. We would have had to do a property line adjustment. I think at one point we talked about cutting off the garage.
Yeah, so you
making it
could
even
have
more
kind of made like an
complicated.
L shape to get a
Yeah.
little bit more land, but it would have, you have to demo the garage, and it's a PLA and not just a lot confirmation. But yeah, so that was super simple. I also really just enjoy renovations of really bad houses. It's incredibly satisfying. Like I think that's, as far as enjoyment in deals goes, the uglier the house, and then like turning into something that people actually like love and will, they'll get in bidding wars over. It's probably the more fulfilling aspect of like real estate that I think I do.
So what kind of buy and holds do you have right now?
So I have that Kansas City mixed use.
Do you have your rent by the room, your first one still?
I do, yeah.
Is it still rent
But
by
it's
the
not,
room?
no, we
It's
manage
not-
it as single family.
Yeah,
right?
it's okay. I have
You had a bad tenant.
I have a
fucker sucked.
DSCR loan on that one with a prepayment. I'll probably sell it. It's just return on equity. I got 150 in it in equity, and it's not. It's
Why'd you switch from rent by the room to just headache?
well, I'm not living there, and it was all friends of mine.
Okay.
Portland rent regulations apply to rent by the room. So if you have any issues with a rent by the room tenant, it's as if it's like you can't evict
And
them.
ruins the experience
In
for
the same
everyone
way you
else.
can't evict quickly with a full unit, you can't evict with like a room. So you could have a problem tenant living right across the hallway from they're sharing a bathroom.
Yeah,
It's
like
just,
there's a big movement for pad split to come into Portland right now, and someone tried to
I
connect
thought it's
me.
here.
What's that?
I thought they came.
Yeah, no, they tried. Well, no, they came. We looked at them in 2016, I think.
Okay.
So they've been here, but now there's this just big push, and I think there's a lot of people that are globally eating it up. Oh, I'm going pad split. They're not. It's not smart play.
the premium that you get for rent per room is not worth the risk.
Correct. It's
So-
like going to the Midwest thinking you're getting a 14 cap, and then you get a 6 in the back end.
And not only that, what I found in Portland is your tenant quality or the issues you have with tenants goes down dramatically with higher rents.
Yeah.
And so if you're basically targeting kind of the lowest tier of
Those
rents, it's not
problems.
even a 1-bedroom or a studio, it's
Yeah.
a room, so you're not getting compensated for the risk that you're taking on.
Thank you. And
That's-
the hassle.
Yeah. So all of my rentals are in like phenomenal locations. They're like all renovated. So we've had zero problem tenants.
Are you buying those to acquire them typically?
Yeah.
Okay.
Some of his lot splits, he's just kept retain the existing.
Yeah,
And
if
then
there's
they're just-
enough equity sitting
Yeah.
there and just sit on it. Okay.
Yeah. So it's built ADUs on a couple of them.
Oh yeah. That's a good. Yeah. We have a lot more under management than I remember.
Yeah. So
49th was a great deal.
49th was a great deal. It was a single family home in a great neighborhood.
Dude, that was off Clinton, right? 49th.
How'd you redevelopment play?
So it's on a hill, and it had.
We had Dustin Miller on. We talked about Clinton just a couple episodes ago.
Oh yeah,
phenomenal part of town.
So yeah, fairly close in, right next to Division, which is a really great arterial street, and it was on a hill, so kind of had a half daylight basement. Bought it on market for $325.
That was a good negotiation
during COVID. Yeah, so they listed it at $500. Dropped the price to like $450, and I offered $300, and we settled on $325. And the whole house needed to be completely gutted. Like it needed a ton of work, so probably put $350 into everything.
That's
so
a big reno.
But that's 2 ADUs.
So yeah, built
okay.
a detached ADU in the back and put a ADU in the basement.
Oh, okay.
So it became 3 units, 1 to 3, all in at like $700.
What does that rent for per unit?
It rents for per unit $2,500.
Oh, so $7,500 and
It's a
rent
1% rule.
$700,000.
Yeah.
With new products, now you have less.
And that's
expense.
kind of where our heads are at, because like that was a great deal, but it took a ton of work to get to that 1%. So if we can buy a 1%, without
in place.
So and that's where it went. So we would work our ass off to get to the 1% rule prior to COVID and during COVID, and now you're just making offers at the 1% rule. And so that's and that's why we say real estate's on sale. It's not that it's a better cash flow. It's not that it's more excited to own it the way we can buy it at the 1% rule now. It's because its basis is at a level that we are very unfamiliar with, that we had to work really, really hard to get to. And so now you get to that basis just by writing an offer.
Yeah.
So it's a significantly different strategy for a much better future.
Yeah. So you went in hard money on this, and then were you able to pull all your money out then at refi?
Yeah. So it appraised at 1.1.
Yeah, I was going to say it's worth over $1 million.
So we pulled out all of our money, and I brought on a builder partner on this one because I had never built ADUs before.
Yeah.
And I was like, I don't want to
take on the risk.
He brought in some capital too, so we're still partners on that one. We refinanced at 5%. It was kind of right when rates were coming back up.
Still a good rate.
Yeah. So it cash flows after everything net $1,800 a month.
That's sick. And no money in, and you have $400,000 plus of equity.
Yeah. Cool. I think values probably come down a bit, but
I get cash flow off it too, man.
Yeah. You get 10% of his.
Mike loves these like close in rentals because
they're the best.
That's the thing with property management. They get compensated as a percentage of gross rents, but the lower the gross rents, the more work for Mike.
Exactly.
But the less he gets paid.
This is the reason we sold off our client portfolio, is to reallocate our resources into a better management system I
know a property manager that gets compensated off of NOI though.
Oh.
So there's a little bit more alignment.
That's interesting.
Yeah.
We'll have to talk about how they structure that. That's interesting.
They charge a slightly higher PM fee, but
but they take on the risk.
Is there like a clawback then based on NOI?
I don't know.
Interesting.
He's in a different market, so I haven't asked. But yeah, so that was a great deal. It's probably not repeatable right now. I think if we were to refinance at 7.5%, we would have to leave money in the deal.
That could still be a decent deal.
It's still a good deal, but it's just the work and then your capital, your return on equity.
It's opportunity costs.
So how come you decided to keep that one versus sell?
It was a basement ADU, so I think we'd have to sell the house with the ADU. We couldn't condo each unit. And
well, you could because you can have a single family with an ADU condo. You can't have a duplex condo, but you can have a single family with ADU condo. So you could still make it two sales, but not 3.
Yeah, I mean,
you could make it 3. It just would not be a great third unit.
Yeah, who would want that?
Yeah,
it would be weird. I never really, at that point, it was pretty early on in the condo process, so I didn't even think about that as an exit strategy.
But if you could just sell it for 1.1 to an income producing buyer, then that's the better way to go.
Yeah, I mean, I don't know where the FHA triplex limits are.
I think they're over $1 million.
Yeah,
I don't know either. Okay, that's sick.
But yeah, multifamily in potentially other markets too. I mean, we know Portland, but I don't think we need to be.
So for you guys because you don't, how long have you guys been trying to do a deal together?
Just in the past few months. Yeah. I think we
Like
started
3
talking
months?
about it in the winter. Yeah.
Mhm.
So
Really
that's
winter.
kind of a long time to look for a deal, I feel like, and not get one with your guys' sophistication level too.
Well, again, I'm as distracted as it gets.
Yeah.
And he's
And we're pretty
very
picky. I
Yeah,
think.
exactly. In order for it to make sense for us to combine our resources in that, it has to be a really good deal. And he's got the same mindset I do right now, which is it's really bandwidth oriented.
Yeah.
And if we're going to take on this big project, because it is, these are big units and they have turnover and there's management work to be done, there's construction work that needs to be done, and so we want it in the right way.
And some of the deals that we were looking into at the beginning are still
available. Yeah.
And we're still talking to brokers. And we're a lot more familiar with the deal now.
Mm-hmm.
I also think, we don't have a huge track record with sub-institutional multifamily. So the first couple deals solidify your reputation. You want to make sure they're really good deals so that you develop a reputation as a solid GP. At least, I mean, that's kind of how I think of it. Those first deals, I think.
How much
matter.
are you guys trying to take as GP on these deals for it to make sense for you too?
I mean, it kind of depends on the deal,
Sure.
I think.
Yeah, and we're not, like you talk JV versus GP, again, we're just trying to create small partnerships that are in a syndicated
ideally go
way.
JV.
Yeah. And so it's not even a fee, it's a broker fee, right? To make it a less complicated, because you entitle it or you structure it as a JV, but then you kind of do the entity ownership wise, it's a JV, but you're trying to do the broker commission, that's how you
Fees,
structured it economically.
You can take AC fees on a JV still, yeah?
Yeah, that's what I mean. So that's how you kind of look at it as a syndication where you're getting fees up front and ownership on the back end. And you've heard me say this a lot of time where there's brokers that are talking to guys like us that they would not be talking to. They're talking to Caleb. They're just getting my real estate schedule.
Yeah.
So Caleb's the one doing all the work.
I'm letting them represent us, and I'm a trader. This is another conversation, but I don't necessarily believe in just holding assets indefinitely. I think the tailwinds that we've experienced demographically aren't guaranteed for the next 50 years. You just look at population growth, and you look at migration, and you look at, like migration from other countries, not just from states. We're not receiving a lot of the migration that kind of like bolstering population growth in the US. So while population growth might be still a trend nationally, most of it is going into Sunbelt and, closer to the border and, just in like economic hubs. And
COVID interrupted not international, but our national migration patterns between the interstate migration patterns significantly, both economically and politically. And that steered away from Oregon over the past few years. Will it get steered back?
Yeah, and the thing with Portland, I mean, there's the national birth rates that are declining. We are probably well below the national average as a city on birth rates. Yeah. Well below.
Mike, you better get to work, dude.
Hey, I'm doing my part. I got one. Two is over replacement value. So, or no, is it 2.5?
Yeah, I think you need 3 to qualify. Okay. Yeah, to actually say you're supporting.
Yeah, I mean,
because you have to offset all the couples that aren't having any.
They have a lot of dogs, though.
Oh,
they might need like apartments just for their dogs at one point.
I mean, you got a dog wash station. You got to build it. If you build an apartment building, you got to throw in a dog wash station.
So, anyways, all I have to say, I'm more of a trader. If we get a price that it doesn't make sense to keep holding or selling. So that's an incentive to a broker.
Yeah, you can sell it on the back end.
We'll give you the list back. So I think that's part of why they're talking to us. I also don't think there's a lot of people. I don't think there's a ton of buyers out there.
That's why they're talking to us.
Like one of the deals that we lost out on, it went to first-time investor, just with trust fund money, or I don't know where he's getting his capital from.
Yeah,
I keep waiting for it to fall out. I've got my
Is that the one that the townhome unit in Southeast or the
South
that hasn't closed yet?
Yeah, the 40 units.
Okay, yeah.
So, anyways, all I have to say, I think at least near term, the next 5 years, there's some potentially really great tailwinds. Next 50 years, remains to be seen.
Right.
I think there's a lot of macro trends that we haven't really fleshed out. Like,
so you're thinking 50 years in the future when you're trying to look at these?
Okay, let's bring it back to 20 years. Self-driving cars, I think, are going to really impact real estate values for parking. You know, you look at all this undeveloped land that's currently being used for parking. You look at every garage. You know, all these apartment buildings with, you know, it's not so much in Portland because we haven't weighted parking as heavily because we're still fairly walkable. But you look in like Sunbelt cities like Dallas, where you've got one spot for every resident. If let's say half of those residents don't need cars anymore because self-driving cars have become so cheap, how does that impact what you can do with that extra space? You know, so it could open up a whole bunch of opportunities. I think. People might live further away from the city. They might not choose to live as close in.
So smart investing is you're looking for success in the short term and the midterm, and then sustainable debt into the long term.
Yeah.
So as long as you have the sustainable debt into the long term, it doesn't matter what comes out as much.
So you're looking at doing these new deal types and whatnot. Like, why even go bigger or do more? Because you're a lifestyle investor. You've kind of mastered this model. Why not just do more of the current model and double down on that?
Deal flow, I think. It's not like land is fleeting in Portland, and this works really well in the city of Portland. I have never ventured out of Portland, so I haven't tested the waters in other cities where there is more land. But as far as like the low-hanging fruit of these lot splits, there's a finite number of them.
So with house flippers, because I've thought about that, I was like, we're going to run out of houses for people to flip. But it's the cycle of someone inherits a house, they don't take care of it, and I feel like they're there forever. Like, but I guess you're building on all the land, you're saying. So it's
it's kind of land optimization.
Yeah.
So it's like you could split it, you could build it, but with all of these incentives from the city with SDC waivers and code changes, like there's a lot of people dipping their toes in there, and so there's just more competition.
Think of it this way: when you flip a house, you take one piece of inventory out of the flipping inventory market, but someone else adds that inventory back in because it's a house. When you flip a lot, it gets developed, it never comes back as inventory. And so every deal you do, you're eroding future projects.
Yeah.
So, because I would imagine with the model you're doing, you could do it in a lot of major cities. Because, like, Jan, so he does the same exact play. He was doing 5 at once while we were in Greece that he was managing. And it's saying he builds it, condos it, sells them, does the same thing. He goes for like $200,000 per.
It could be 100% virtual. Like, you don't need to ever set foot on the site at all. So
now you
it could be done in other cities for sure. And maybe that's...
okay. So just compare my stress load to Caleb's stress load, right? So I rarely ever go on site. Like, I can do this remotely, but when you're extended that far in bad market conditions, I'm stressed the fuck out.
Yeah.
He's not.
Yeah.
Right? So Jan, yes, he can do that. Was he stressed out? How many of those projects are successful? What's the timeline on all those projects, right? Like, yes, he can.
Was impressed. He said that 5 was too many at once for what he would like to do, but he was profiting on every single one. Like, it was pretty cool. And he's a really good house designer, so he's spending like 20-30 grand more than the typical person, and he's not selling it necessarily for that much more, but he's selling it immediately, so all his holding costs are less. And he just has this like weird knack of like designing this stuff, and people really desire it. And I walk in there, I'm like, dude, I could not do that. I have no clue. But yeah, sweet. Well, I think that was an hour too. Yeah, this one's went by fast.
Yeah, it's a good show, man.
I'm glad Gabe wasn't here, so I got to talk more.
Wait, did you just say Mike brought in another of the best guests?
Yeah, you and Sang are best 2 guests.
I wouldn't say that. I think they're both awesome. But
Sang's in a league of his own.
The car guy Speeds, what's his name?
Awesome. Yeah.
I always forget.
I forgot to.
I actually need to reach out to him because he's just a really cool dude. Yeah. You're hosting right now. You got to wrap it up. Oh,
that's why I'm looking.
All right.
We're just looking at you.
Hey, thanks for share, like, all that stuff. Love you. Bye.